All right. Good evening, guys. In this video, I'm going to be showing you the Fibonacci settings. What you really need to have on your Fibonacci settings. All right. The Fibonacci tool will enable you to identify the area of supply and demand in the market. The supply and demand zone or trading the supply and demand zone can never be overemphasized in the market because the business of forex trading is business of buying and selling, and that has to do with suppliers and the demanders. All right, so with the aid of the Fibonacci tool, you'll be able to know where to buy from and know where not to buy from. So now I'm going to pull out my Fibonacci tool to show you the setup. All right, just like you see on my screen, all right, we have the area of the premium zone and the discount zone. Now, here is the area of the premium zone for the discount zone, and we have the area of the premium zone. All right, and I'm going to change the color of this to color red. All right. Now you look forward either on the upward trend or on a downward trend. You look forward to buy sell from the premium and also look forward to do what buy from the discount. All right. Now, how do you draw your Fibonacci tool? We come to that. So before we do that, I'm going to show you how to set up your Fibonacci settings. So what you should do is once you have your Fibonacci tool, just double click on it, all right, and it's going to like give you the setup. All right. Now these are the things you need to focus on. All right, you can change the trend line color to black. I'm going to change mine to black. All right. Okay, fine. Now make sure you mark this 0, mark 1, 88, 5. I'm going to add 62, level 62 to this Fibonacci settings. 62. Now I'm actually using a 0.62. 0.62. Now I actually approximate this, like some use is 0.618. It's actually depending on you. People trade the ICT love to take trade from the 62 level. All right, now this is what you should have, and I'm going to change the color to purple, then click on OK. So now I have my 62 level. Now how do you trade with the Fibonacci tool? So now let's go to a buying market. I'm going to be using Euro GBPY, sorry, GBP USD as an example. All right, let me zoom out completely from the charts. You may let me go to 1 hour time frame. Of I actually marked out the level of demand and supply. All right, I marked out the demand and supply. And how do you pull out your Fibonacci to like how do you identify the Fibonacci on the chart? Now this is for the new day. All right. Now if the price is on an upward trend, right? If the price is on an upward trend, what should you do? Pull out your Fibonacci to tap on it, drag it to the pullback. All right. That is from the low to the high. All right. And how do you now trade with this Fibonacci tool? Now, from the chart, you can discover that we have the discount zone and the premium zone. We have the discount zone and the premium zone. Now, here's the discount zone. All right. I'm going to be changing the color to blue. And here's the premium zone. I'm going to be changing the color to red. Now, let's assume we're going to be trading within this zone. We expect price to pull back to our discount zone before we look for buy setup. Now the demand are in power. That is why you discover that we have more of the demand on an upward trend, right? So now, how do you trade the Fibonacci? You trade the Fibonacci in such a way that you expect price to retrace back, right? Now the price has been going up, right? The price came here, so you expect price to pull back to the discount zone. That is when you now look forward to buy. All right, you may take note that price is currently did not pull back to our premium zone, it means we have no trade. You don't force yourself on any trade. Let price come to area of interest, and you now look forward to take trade from your point of interest, all right, before you take trade. And you don't just take trade from your point of interest, you take note of available liquidity so that you don't become the liquidity. Now, you expect trade to come to this area, then you look forward to buy up, all right. Now, you can enter with risk entry and confirmation entry. Now, you may look at the chart and discover that I'm actually using my area of interest, all right, as my premium zone on the Fibonacci 2. If I'm looking forward to buy, is the 71 and 79. Anything that make price to come to 88 or 100, it means price is going to fly up massively. Now, if I'm actually going to take this particular trade, we have a demand zone in that particular area of interest. I'm not going to take the trade because there's an inducement liquidity, structural liquidity below. So it means I'm not going to be taking this trade, all right, so that I don't become the liquidity. And you discover we have a fair value gap there that price needs to be filled, and we have it means price is going to respect the demand. Is going to respect the extreme zone instead of the decisional zone. I hope you understand. Now, as you can see, demand has been in power, and now supply be, um tend to be in power in this particular area. And now do I know? Because price is already in a downward trend and we look forward to sell. How do we pull our Fibonacci tool for a downward trend? You pull from the lower high, all right, from the lower high to the lower low, all right. And since the price is on a downward trend, and you discover that our area of interest is at the top at this area, so it means we are looking forward to sell from the premium and buy from the discount. Meanwhile, it's more advisable to buy, not to buy on a downward trend. If you actually are looking forward to buy, it means you buy from this point, and your target should be the 50%. Don't even think of buying to this area is a counter trade. It's not advisable, and it will be at its best if you just focus on selling once price is on a downward trend to secure your fund. All right. So I believe you've learned a lot and discover that in this particular trade, if I'm to take trade and I'm going to, you see, this is the demand zone supply zone that fall into our premium area of interest. So I'll be looking forward to take this trade. But because there are liquidity sweeping sitting above, right, it means I'm not going to be taking trade because we have liquidity sweep and we have inducement liquidity. There's every possibility that price can pull back beyond the 50%. All right, so if I'm going to take trade from this particular zone, it means I'm going to wait for confirmation entry, wait for a change of character, then take my trade. So this is my supply zone marked up on GBP USD. All right, and look at what price did. Price filled the imbalance, tap to this particular demand zone and, supply zone and start coming down. But one thing we must need to take note is that price already broke out of the trend. Must possibly be a change of character. That is, anything that make price to break this particular area on 1 hour time frame, it means we have a change of trend. So that'll be all for now.